Yesterday, we had on the platform Georgia Quinn, General Counsel at Anchorage. Such an incredibly interesting interview and explores an incredibly important topic, legal, regulatory, and compliance in the crypto space. I know when I was at the Bitcoin conference in Miami, it was something that every traditional investor seemed to have on their mind, this topic of this legal and regulatory uncertainty. So today, we wanted to follow up the Georgia Quinn interview with footage that's never aired before on the Real Vision platform. This is footage from the Crypto Gathering. This is an interview with Caitlin Long, founder and CEO of Avanti Financial, and Jeff Horowitz, Chief Compliance Officer at BITGO, and it explores very similar ideas of this incredibly important topic. Real Vision is hosting the Festival of Learning, June 23rd through June 25th. For more information and to buy tickets, click on the link below. And now, on to the show. Welcome back to Real Vision Crypto's Crypto Gathering. I'm Ash Bennington, crypto editor and senior editor at Real Vision. Welcome to WTF is Happening with Regulation, a title I definitely didn't write, but a topic I'm incredibly interested in discussing here today with our two distinguished guests, Caitlin Long, founder and CEO at Avanti Financial Group, and Jeff Horowitz, Chief Compliance Officer at BITGO. Caitlin, Jeff, welcome to you both.
Thanks Ash.
For having me.
First, before we get started, for people who aren't securities lawyers or chief compliance officers, what's the real world significance of this topic, and what's the current state of play of regulation in the crypto space right now? First to you, Caitlin.
Oh boy, it's a shifting landscape for sure. Let's talk specifically about the U.S., but of course it's happening all over the world, and different countries have different approaches. And obviously, with the change of the U.S. administration, what was crypto favorable and unfavorable previously has sort of switched. So specifically, we now have a crypto forward SEC commissioner coming in, but less crypto friendly bank regulators coming in to the Biden administration. And we definitely have a lot of activity happening in the US states as well. But we will see increasing enforcement action and activities cracking down on unregulated uses of crypto. And that's going to be one of the fault lines, I think, that's coming to this industry in the next couple of years.
Yeah, very interesting. Jeff, to you, what's the current state of play and why is this so significant right now?
Yeah, I agree with Caitlin. While we have a change of administration, from a global perspective, I think regulators are still playing catch up. You know, if you look at just what happened on Friday with FATF guidance, they clearly have DeFi and NFTs and DEX in their scope of not allowing any gaps in AML controls and risk management as it comes to cryptocurrency. So we still have a lot of work to do to educate regulators and figure out a way that we don't stifle innovation, but we manage risk appropriately.
Jeff, to precisely that point, for people who aren't following this as closely as you are, what was the significance of Friday's guidance? And first, what is it big picture in layman's terms?
I think big picture, the FATF, which doesn't regulate exchanges, they regulate countries and what regulations they need to have on their books. They've looked and they've said before, we're not going to have gaps and allow different regs for cryptocurrency than we do for banks and broker dealers. And as we continue to innovate as an industry, they're looking for ways to make sure that all of that innovation is covered. So what worried me on Fridays is they're looking to regulate somewhat the unregulatable. right? If we have a totally decentralized protocol or network, they want to put the onus on the regulated entities that intersect with them, because they can't regulate people, they can't regulate software. So what's the next best thing? Put the onus on the industry that is regulated. And some of the pronouncements out of that are just really unattainable. And I really wish the regulators, instead of applying a banking standards to a white paper, we actually come up with sensible regulation, because we didn't have some of this technology that we're doing transactions with 30 years ago when many of these rules were built. And it's time that we think out of the box.
Yeah, totally different landscape in terms of products and services. Caitlin, I see you nodding. What do you think sensible regulation looks like?
Well, I helped draft some of it in the state of Wyoming, and it's open source. It's available for anyone to use, and a number of companies are coming in. I just heard of a big name company coming in yesterday to use the Wyoming laws, and it very much respects the nature of the open source, decentralized nature of Bitcoin, Ethereum, and other open permissionless protocols, but does it in a way that bridges the gap to the traditional financial services industry. It is not regulatable at the end user point, as we just heard, because these are decentralized protocols, and it's impossible. For example, the travel rule is written so that financial institutions share information with each other at the time of transaction. Well, when you have a 2-day settlement period, it's a lot easier to share information with each other than when you have protocols that don't permit the transmission of information about who the user is during the transaction. It's just impossible to comply with that particular standard. And so there has to be a recognition of the next best thing. And that is indeed, for example, there is a very extensive travel rule working group in the crypto industry among intermediaries on how exactly we can come up with the next best thing, which respects the fact that the protocols don't allow the instant transformation of identifying information, and it has to be done through a separate protocol, a separate database, and therefore you're not going to have precise matchup of the timing. The interesting challenge with that, though, is we can have precise matchup of the timing of the settlement of transactions. That's what smart contracts and programmability are all about. But we just don't have the ability to add that additional piece of information to these permissionless open source protocols.
Yeah. Caitlin, I'm glad you mentioned Wyoming. Of course, you're coming to us from the Cowboy State. As we can see from your set, you have the very cool wild horses behind you. You've been very much involved in some of the initiatives out there in Wyoming drafting legislation, the SPDIs, special purpose depository institutions. Tell us a little bit about what's happening in Wyoming and why it might be a model for the rest of the country.
Well, it's interesting. Just this morning, I was working on taking a look at legislation that the state of Texas is proposing that's modeled on the Wyoming legislation. Some really great things about it, really pushing the ball forward. Definitely needs a little bit more work, but it does yet again show, I think there are now more than a dozen states that have copied various of the Wyoming laws, and hopefully more to come, because one of the things about the institutional aspect of crypto is that while retail didn't really care that the legal status of a Bitcoin transaction was in a gray area in most countries in the world, the reality is that institutions can't accept that. They have to know what their rights and obligations are, and have to know that when they transact on these networks, that they have a legally enforceable right to the asset that a judge isn't going to intervene and try to take back. And so as institutions get into this, those kinds of issues have to be dealt with. They definitely, the legal community is playing catch up, the accounting community is playing catch up, and of course the regulatory community, as we already heard, is also playing catch up. There's still a lot to be done. But institutions are the ones who are demanding these higher standards, and I think as this next cycle is starting, the next 4-year cycle in Bitcoin, we will see more and more clarity. I know, for example, the Uniform Law Commission is proposing its model law, aiming to have that done by the summer of 2022. That's been a 2-year process that's already been in force, and Texas is jumping out ahead of that, just like Wyoming did, because we really can't wait for these very, very long processes. There's more than $1 trillion in Bitcoin right now, and that's just Bitcoin alone. And frankly, no one really knows in the event of litigation what's going to happen, because judges have no roadmap for adjudicating disputes. We're going to see that in very stark terms in the CRED bankruptcy, which was filed in late 2020 in the state of Delaware. And a Delaware judge has no law through which to adjudicate the dispute. And so we're going to watch the mess unfold, I think.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.